I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. I think that as Bitcoin is integrated into the fabric of the global economy, I think you'll see right. How about 1,000 banks that are actually trading peer to peer with each other? I think that the banks, the custodians, megacorps. I see a world where every major bank and every major tech corp, maybe a Google and an Apple and a Microsoft, they're all settling or moving large amounts of Bitcoin around on the base layer. Governments.
Michael Saylor, an optimistic investor and co-founder of Strategy, confirms his prediction of a surge in Bitcoin's value and says the digital asset is on track to reach a market capitalization of $200 trillion. Bitcoin is currently worth around $2 trillion. It will reach $20 trillion, then $200 trillion. Then it grows 20% a year, Saylor said. This capital comes from China, Russia, Europe, Africa, Asia, from the 20th to the 21st century. If Bitcoin's market capitalization reaches $200 trillion, its price per Bitcoin would be around $10 million. This figure is calculated by dividing $20 trillion by the maximum supply of 21 million Bitcoin. His comments come as U.S. President Donald Trump announces plans to create a strategic cryptocurrency reserve, which would include Bitcoin, Ethereum, XRP, Solana, and Cardano. This proposal has sparked heated debate within the financial and crypto communities. Saylor acknowledged that while some favor a Bitcoin-only approach, Trump has opted for a broader strategy. There's no other interpretation than to say this is a bullish strategy for Bitcoin and the entire U.S. cryptocurrency sector, she stated. Some conservatives believe the right path forward is a Bitcoin-only policy, but the president has embraced a more liberal economic policy, and that's his right. If the United States positions itself in the emerging crypto economy, if it buys 10% to 20% of the Bitcoin network, we will pay off the national debt. According to Michael Saylor, if you own Bitcoin, then never think of selling it. Or if you don't own any Bitcoin, then start accumulating. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
If I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement, because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. So I think that that's a very powerful dynamic, and once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week. And the same with BTC-backed credit. If you look at all the credit instruments, all the preferred stocks, all of the fixed income, all the annuities, all the corporate bonds, all the high yield bonds, the junk bonds, all the investment grade bonds, all that huge amounts, it's all going to be recapitalized or reconstructed on a Bitcoin standard that's bigger than the equity. And so I think that there's a digital transformation of the capital markets going on right now, and it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common.
Michael Saylor's Bitcoin price predictions are among the most influential in the cryptocurrency market. As the CEO of MicroStrategy and one of the largest Bitcoin holders, his analysis is critically important for investors looking to navigate this volatile asset class. This in-depth analysis deconstructs Saylor's prediction methodology, examines its historical accuracy, and provides actionable insights for investors looking to capitalize on potential fluctuations in Bitcoin's price. When analyzing Michael Saylor's Bitcoin price predictions, it is essential to recognize that his predictions carry exceptional market weight. Unlike many cryptocurrency commentators with little capital, Saylor has tied the future of his multi-billion-dollar company to Bitcoin's performance. This significant financial commitment bolsters the credibility of his viewpoint while creating potential biases when assessing his objectivity. Saylor generally orients his predictions toward longer time horizons than most market commentators, often assessing Bitcoin's potential over decades rather than months. This approach is consistent with his investment philosophy, which views Bitcoin as a multi-generational store of value rather than a short-term trading opportunity. Saylor's Bitcoin price predictions represent one of the most optimistic outlooks in the financial world, with targets reaching between $1 and $5 million per Bitcoin this decade. His thesis is that Bitcoin will absorb a substantial portion of the value currently stored in traditional assets such as gold, real estate, and government bonds. While his technical analysis and macroeconomic reasoning offer a compelling argument, investors should approach these predictions with proper context. Michael Saylor said at Bitcoin Sessions that Bitcoin's base layer will become an institutional settlement system controlled by the world's major banks, technology platforms, and sovereign players. He predicted that direct on-chain activity would be reserved for large organizations and that retail use would evolve into a multi-tier infrastructure in the future. He also predicted that major banks and technology companies such as Google, Apple, and Microsoft would be able to settle or transfer large sums of Bitcoin on the base layer. Strategy, the largest Bitcoin holder, has increased its preferred stock sale from $500 million to $2 billion, according to a Bloomberg report. This increase reflects strong investor demand as the company continues to raise funds to purchase more Bitcoin. The company, led by Michael Saylor, plans to price its Series A perpetual stretch preferred stock at $90 each. This price is below its $100 par value and comes with an initial 9% dividend. The shares are scheduled to go public Thursday at noon in New York with support from Morgan Stanley, Barclays, Moelis & Company, and TD Securities. The new preferred stock will rank above common stock and other preferred stocks such as Strike and Stride, but below the older Strive preferred stock and convertible bonds. The proceeds from the sale will be used to purchase additional Bitcoin in accordance with Strategy's continuous accumulation strategy. According to Bloomberg, Strategy's common shares recovered their early losses to trade virtually unchanged at $412.31 each, valuing the company at $115 billion. Strategy, led by Michael Saylor, owns more than 3% of all Bitcoin mined to date after purchasing 6,220 Bitcoin for $740 million. This brings the company's total to 607,770 Bitcoin, worth approximately $72 billion. Strategy has funded its purchases with common and preferred stock as well as debt since 2020. It remains the largest holder of Bitcoin, ahead of companies like BlackRock's IBIT. Strategy shares have risen more than 3,500% since it began buying Bitcoin, while Bitcoin itself has gained around 1,100%. For comparison, the S&P 500 gained about 120% during this period.